Hi friends, good evening. Wish you all a happy weekend. This weekend I want to discuss about selection of options for intraday or BTST. How to catch a option for trading, because now futures are having more leverages. More margins are required for trading futures, and from February it is going to be doubled. So obviously we are going for options. So for option buyer, we should be very careful. We should not give more premium. So we should know when to enter, when to exit, and we should choose a best option stock. Okay, how to do it? That I want to discuss few points. Small webinar. Please see this. I am going to NSE derivative open interest report. So like this. This you have to do at 9:45. What I am doing is, just you see, I want to check first expiry. If I want to buy calls, I have to click call option. In this call options, you can see here, in these call options, I want to check, is there any open lows in call options? Okay. And then just remove this. Slowly we will add. Okay. How many are there open lows in call options? There are around, around 15 are there. UBL, JSW Steel, REC, Cummins India, HDFC. These are all open lows, but we don't want just open lows. We want to buy something which is having good volumes also. So many things are there. Okay, not this call options with open low, and that price should be going up. That also another point. Okay, so where price is going up, that we will see. Here price is going up and open interest is also going up. See, this is, so what you have selected is, you want to see current month options where calls are, prices are going up and open interest is also going up. Okay, that means here 94 entries are there. What are the stocks? You can see here stocks, so many strikes are there for Havels, Nifty, BPCL, L&T, ACC, Apollo Tires, BPCL, Cipla, Coal India, HCL Tech, so many are there. Okay, so out of 94, that means around 20 stocks are there. Now what I am doing now is, I want to see whether this quantity is greater than 1 lakh or not. So click on the quantity. So these are options. Out of 94 options, how many options are there whose quantity is greater than 1 lakh by 9:45? So 1 lakh quantity should happen in first half an hour. So out of 94, how many are there? 54. Okay. And these are all open lows. So right from the morning, people are buying these options. Okay. So open low with with the price increase, see, and with the OI build-up. You can see price up, open interest up. These are all open low. Open low means right from the morning they are going up. Second point. Third one, these options are already having volume of 1 lakh by 9:45. So how many filter ho gaya now? Only 54 are there. Then is the open interest is change is greater than 1%. So greater than 1% by 9:45. Now you see how many are there? All. So many are coming. Then you make it 2%. All. Open interest change, then make it 5%. Then how many? 50. Then make it 10%. You are seeing how many you want. Your intention is to filter this 50 to 10 or 12. So you make a open interest change to 20 now. Please see how we are filtering. So 42 are there. So by quantity, 94 has become 54. By open interest, this 54 has become 42. Okay. Then this OI change in quantity is not required. Okay. If you want, you can keep it. Because we have used percentage, that is not required. Okay. Then percentage price increase. That means this option should increase at least by 20% in these first 15 minutes or 30 minutes. 9:45, you are doing this. So in half an hour, how many options have increased the price by 20%? Then you will see you got 35. Then that option price should not be 1 rupee or 1 rupee 50 paise like this. You can see 90 paise is there, 1 rupee 90 paise, 2 rupees. This should not be there. For making money, at least it should have at least 20 rupees, 30 rupees, or at least more than 10 or 20. Okay. So you want that one. So the price range should be greater than 20. Now you got it. So like this, you can buy Havells call, ACC call, Balakrishna Industries call, Eicher Motors call, Tech Mahindra calls, or TCS calls. So like this, you can shortlist a stock based on the open lows strategy. Open lows already you know. This is open low strategy for option. Now it is not over yet. Now you can see here. So we got these stocks where this is price is going up and open interest is going up. That means retailers are buying this. So as we know, when retailers all are buying, what will happen? Most of the options will become zero because most of the retailers lose money because of paying more premium. They will become zero by the expiry or something like that. So these are the stocks where retailers are buying. We want to see, is there any stock of the same category or of the same stock, any strikes are there where big people are exiting that. Okay, so these are the stocks where retailers are buying. And now I want to see, is the same stock upper strike or lower strike, big people are exiting. That means they have shorted thinking these calls will not go up, but they are also thinking that these calls will go up. Now you just press same, there is no change in price up. Now price up, but open interest is going down. You remember the stocks, Havells, ACC, Tech Mahindra, TCS. So click on price up and open interest going down. Just click. Okay, now you got what? Havells is there here. So Havells is there in open interest going up, Havells is there in open interest going down. That means open interest is going up because retailers are buying 1030. Open interest is going down because big people are exiting 980 crore. That means Havells is going to touch 1000. That these people know in the morning itself. Big people know. That is the reason these people who have written 980 calls, 1000 calls and all, these people are exiting. But which one retailers are buying, that also you will know. So retailers are buying 1030, whereas big people are exiting Havells 980. That means big people know that it will go above 980 in the morning itself, whereas retailers are started buying 1030. And smartly what you have to do, you can buy Havells, not what retailers are buying. You should know which strike also to buy. That is the next point. But you should know selection of the stock. So you should select Havells because retailers are buying and Havells big people are exiting. What is the second one? ACC. ACC is there here? No. Yeah, it is also there. ACC. 1700 big people are exiting because they think it will go up. What retailers are buying? Retailers are buying 1800 because they know it is going to 1800. So retailers are buying. These big people also know. So you have to see where big people are interested and small people are, and retailers are also both interested. Now you can see here, Balakrishna Industries. Here retailers are buying, but big people, it is not there. So you leave it. Eicher Motors, small people are buying. Big people are not exiting. So avoid Eicher Motors. Then Tech Mahindra, retailers are buying. What about big people? Big people are exiting. Big people are exiting 1050 calls, whereas retailers are buying 1080 calls. You should know that. That means retailers are thinking it will go to 1080. That means all these things are, in other words, these people, why retailers will buy? They will think because their charts have given a buy signal on futures chart or cash chart. That's why retailers are buying. But you should know whether these charts are going to work or not. Out of 20, only 5 or 6 will work. Why? Because these people are buying because charts have given buy signal, and they will work only if big people also thinking the same. So many are there, but only few people are, big people are also thinking. For example, here Sun Pharma, it is not there here, whereas big people are also exiting. So Sun Pharma also will go up, but retailers are not buying right from the opening, but it will go up because big people are exiting. Maybe next Monday or Tuesday, Sunday will go. Okay, someday it will go. So Tech Mahindra is there. What is the other stock? TCS. TCS, what is happening here? All retailers are buying 3240, 3160. But what about big people? Big people are not exiting TCS. Okay, like that. So you should, this is a one way of knowing a good stock. That means open low of high quantity options, where right from the opening retailers are buying, and right from the opening big people are exiting. Big people are exiting means open interest is coming down, retailers are buying means open interest is going up. Both are having the same stock with different open interest. That means here, because retailers are buying, open interest is going up. Because big people are exiting their short positions, open interest is going down. Okay, this is why. Then what about the strike price? Which strike price I have to buy? Let us come to here. Let us take the example of Havells. In the morning, let us say, in the morning itself, you know that retailers are buying 1030, whereas big people are exiting Havells 980 call. Then we will go to Havells. Let us see Havells option chain. Just Havells. What is the opening price of Havells? 972. Okay, open low means at 945 you are getting that. At 9 morning itself, these big people know that Havells will close above 980. That is the reason these big people have started exiting their short positions in Havells. But retailers have started making their positions at 1030, because 1030 premium is less, they want to buy. But which strike you have to buy? Then you have to enter Havells and you have to press F5. If you press F5, you will get option chain, and you have to arrange in the based on quantity. Highest quantity is there. Highest quantity of call is traded at 1000. But where highest retailers are buying, they are buying at 1030. Okay, retailers are buying at 1030. Big people are exiting at 1000, 980 and all, because you can see negative open interest means they are exiting. So they are exiting at 1000 and all. That means where big people are expecting is it will move above 980 or it will move above 1000, like that. But 1020 you have seen here, they are not exiting. That means they are confident that Havells will go up, but it will not go up more than 1020. So when you know that big people are only exiting up to 1000 or 980 and they are not exiting up to 1020, immediately which strike price you have to take is, you have to take either 980 call or 1000 call, but you should book your profit before the stock reaches 1020. You can see here. So at 10:15 itself, you know that when the stock is trading at 970 or 980 or 975, you know that 980 call writers are exiting the position because they know it will go above 980. So after 15 minutes, it has gone to 980, 990, like that. And it has gone up to only 1009. So if intraday you take it, you should know that it will not go above 1020. And if you buy 1020 call or 1030 call, then you will not get much money. And it is better You buy something where big people are exiting. Big people are exiting means their short positions they are closing means premium will go up. So they are having more positions at 1,000. So you should, if they are exiting, always you should see where they are having more positions and they are exiting. You see here, they are having more highest positions based on quantity are in 1,000 and they are exiting this. So you should buy that or this one 980, but you should not buy 1,020 call where they are not exiting. Are you getting what I am saying? Like this, you should selection of the strike. You should not, you cannot buy 980 because of so much premium. Okay, because 948 rupees. But you should not also buy 1020 what other or 1020 or 1030 what other retailers are buying. Because other retailers are buying, that is the reason open interest is going up. You should buy in between, or you should buy highest traded call or something below that, and you should book before this call which is having green open interest. That means where people big retailers are buying, before it reaches you have to exit, because when everybody is buying that strike, most of the time stock will not reach that strike on that day. Okay, got it? Like this you have to select the strike also. Like this. Reverse is buying of the put means you have to click here selection. You want to buy a put, same thing, just you have to press put here. Nothing is there because market is bullish, nothing is there. You have to check put if it is there, otherwise you have to check call like this. So got it now? What is again I want to review this one once again freshly. We were seeing this. I am removing all. All I am removing. Yeah, now see once again I am repeating how to select the stock at 9:45, because if you do it at 9:20 and 9:25 volumes will not be there. At least you should know that this option premium is maintaining open low. That means after half an hour also this continuous buying is happening or continuous unwinding is happening in this strike after half an hour also. Okay, right. First point, see I am selecting all to first. So it is presently all expiries are there, but I want only first. Then you have got how many downside? You can see 524 options are there. Okay, which are active call options. I have clicked call. So this one 524 call options are there, which are prices is going up and open interest is going up. That means out of so many options, 524 options, retailers started buying. That's why open interest is going up and call is going up, price is going up. In that, I want to see which call options are going up right from the opening. That means open low. From opening continuously they are going up. That is 94. In these 94 options, I want to see where in this first half an hour 1 lakh quantity has happened. Click. Then you will get from 94 it has become 54. In this 54 options, how many open interest changed by 20%? That means if yesterday open interest is 1000, now already 1200 by 945. Then you click it. Then you got 42 options. In these 42 options, how many price already premium increased by 20%? Those who premium increased by 20% in first half an hour are having chances of become 40%, 60%, 70% like that. So you click it. Then sorry, not this one. You have to click this one. Then 35. In this 35, you have to remove 1 rupee, 2 rupee, 3 rupee option. Click. Price should be greater than 20. Then you got Havells, ACC, Tech Mahindra, TCS. So these are the options where retailers are buying, and you know their strikes. Retailers are buying Havells at 1030, Tech Mahindra 1080, TCS 3240. All these options they are buying. Now second point is, you should know whether big people are exiting these positions which they have shorted. Then only you take that. Then you click just below that. Just click. No, don't change anything. Just click that. Then which are there in common? Havells is there in retailer segment. Havells is there in big people segment. So retailers are buying, big people are exiting. But next point, Havells retailers are buying at 1030. Big people are exiting at 980. Then go to the stock. For the selection of strike price, go to the stock, then go to stock, press F5, open the option chain, then you see where retailers are buying is 1020. They are buying 1020, and big people are exiting up to 1000 and 980. Red means they are exiting. Highest volumes are happening at 1000, and this they are exiting. So always retailers, whenever retailers are buying something, if retailers are buying 15,000 strike, market will not go to 15,000 immediately. So wherever, all of us know 90% of the retailers who buy in options lose money. So avoid that strike where retailers are buying. Okay, but you should buy a stock where both retailers and big people are also there, because of retailers buying only, call premiums will increase. So that premium, these big people will try to eat. That is the reason they are making position in 1020. So that is the reason this stock will be inactive. So you should buy either 1000 or 980 call, which is less than 1020, where retailers are there. So you should avoid where retailers are there and buy 980 or 1000. Okay, like this you have to select the strike price, which is far from retailers, which is, in other words, which is in the middle of retailers and retailers or big people. Okay, got it? Like this you have to select the strike which is in between big people and retailers. Okay, so this is where the stock should be appearing in both. That means retailers also should be buying a strike, and big people are also exiting some strike. From that you will understand, that is, in other words, the stock will be moving between that. That means Havels will be moving between 980 to 1020. That you will know by 945 itself, by understanding where big people are active. From open low means right from 915. Why? What is the meaning of open low? Open low means the moment market has opened, these people started making positions in options. So that is the reason we are clicking open low for buying call options, and reverse is for put options. Okay friends, thank you very much. We will be coming with some more videos how to use our Spider software effectively for trading futures and options. Thank you very much. Please subscribe to our Wolves channel on Telegram. Daily we will be updating our research details and market updates. And also those who are full-time traders, we are also having full-time courses where for 3 months we will be giving training on data reading and how to use your technicals along with our data reading techniques using Spider software. Thank you very much, friends. Wish you all have a great weekend. Thank you.